Hey everyone, welcome to Stock Sniper Trading. Thanks everyone for joining. My name is Ron, my partner is Dave. It's just after 11 a.m. Eastern and it is Friday, June 26th. So thanks everyone for joining us. We appreciate you guys. I hope you guys are having a great day, a great end to this long week. And you guys are getting ready for the weekend to enjoy some relaxing time with your family and friends. And guys, we're gonna get into it. We're gonna get into the charts. There is um, there is a M pattern right now. We were just talking about in the Discord right now on gold on the 5 minutes. It looks pretty much almost identical to yesterday's little scalp sell for 100 pips. But just if you are trading, if you are taking the sell or you're looking for counter buys to come right back up, just please be patient. You got to watch your charts. I'm going to do a top-down analysis on gold. We're going to review the NASDAQ. Remember the AI trade idea that we had yesterday? It dropped for 500 pips. And I want to break it down how we did it on the daily. And you can enter on the hourly, you can enter on the 30-minute, you can enter on the 15-minute, you can enter on the 5 minutes, you can even enter on the 1 minute. It's when the volume reaches that desired entry level, you have to watch and see for volume to close, look for your confirmations. Is there a fake out? Things like that. And guys, don't forget this today is the giveaway to win 1 month of those AI trade ideas and a premium plan with us at SST. So in our free Telegram that's pinned at the top of the channel, make sure you guys are enrolled in both of those Telegrams, our SST one and the AI trade ideas, because we're going to do the giveaway today and we'll announce it. The winner will get notified, okay, through YouTube. And guys, let's get into it. I hope everyone's having a great day. Remember the time right now, it is 11 a.m. Eastern. We're going to be looking into noon and 1 p.m. Sometimes on a Friday, it's not the greatest volume to be trading at this time. Sometimes it's really choppy or consolidated, but we'll see how markets are moving, right? Every day is a different day and volume needs to be analyzed in order to trade it, okay? And I'm just going to continue to get into it with today's news. US and Iran Hormuz communication line is to prevent military escalation. So you guys know every weekend there's always some news last 2 months, 3 months regarding US, Iran, regarding the Strait of Hormuz, regarding peace negotiations. Sometimes they agree to a peace negotiation, then it's off the table. Sometimes the Strait of Hormuz is open, then next day it's closed. So just be prepared again for some news this weekend. If you are looking to take a position into the weekend and hold it, you have to understand that anything can happen over the weekend. And when markets open up Sunday night, early morning, if you're on the wrong side of that news or the wrong side of that trade, it could be cause your account to take on excessive losses. So please use proper risk management if you're looking to swing trade over the weekend, okay? And especially at this time and nature of everything that's going on with the US and Iran negotiations, okay? Today's news, there wasn't much coming out of Europe. We had right now, just an hour ago, our revised University of Michigan Consumer Sentiment Report and the inflation expectations. You can see it's below the forecast of 50. 50 is kind of like the baseline. If it's above 50 or below 50 is kind of how they judge these things. You can click on the folder and read a little bit more. This one came in just half a percent below this 50 to 49.5. So that was the news. We have some FOMC speakers starting in just a little bit. Kashkari will be speaking, and at 1:30, so this is going to be just after we wrap up our call, President Trump is speaking, okay, just after 1:30. If you click on the folder, it will tell us exactly where and what he's speaking about. So he's due to speak at the Faith and Freedom Coalition's Policy Conference in Washington, D.C., okay? If you guys know when Trump speaks, a lot of time he goes off script and he'll just talk about anything. And you have to recognize this, okay? As a trader or an investor, anytime he's scheduled to speak, even if it's just at these faith and freedom coalitions, you have no idea what he's going to say. And the markets react, okay? That is one thing about this president is the markets do react with whatever he says. So again, just please be careful trading at this time. And it will be going into 2 p.m. where there's a new 4-hour candle and then power hour to finish off Friday and go into the weekend. So, word of the wise is if you're having a good week and you're doing really well and you've, let's say, passed the challenge, maybe you're approaching a payout, maybe you're doing really well with your live accounts, maybe you're doing really well with your own money and you're exceeded your daily goals and maybe you're off to a great start this week. Let's not destroy it by doing something stupid at the end of the week. This is the day, Friday, where you should be scaling down your trading, scaling down everything. You should be preparing for the weekend right now and preserving your profits and then maybe getting ready for a new analysis on the weekend to get into the next week because we're moving into a new month next week and possibly an NFP on the first Fridays of every month, pending holidays and things like that. Okay. So President Trump is set to speak today. Just please be careful. Okay. And as we go forward, just some day-to-day news over here. Micron is in the news. The AI boom now has a price tag, and Micron just sent the bill. Micron had a big day yesterday, big day, double digits in the green, and today you can see it's retracing back. It's down 5% right now. So things don't always go up forever. You can see that there is a little bit of a pullback on Micron today. Michael Saylor and MicroStrategy over here has no easy way out as Bitcoin keeps slumping down below 60,000. MicroStrategy shares are trading at, last time I checked, are $85. This time, like last year, they were trading at $300, $400, $500 if I can remember. I remember trading them at that time. I was scalping them, and now it looks like it's down. Are we going to find the absolute crypto bottom coming up soon? But there's further way that it could go down. A lot of analysts are saying Bitcoin could slump down to 50,000 or even below, but time will tell, right? We got to start to see if there's support coming in, inflow of orders, inflow of buying volume, delta volume. Is there a lot of big orders pending, waiting at these locations? These are the things, or is it more delta negative and continuing selling pressure? Is there any positive catalyst for crypto or Bitcoin coming up very, very soon? Or is it just negative news continuing? Okay. If you've been part of crypto for the last 15 years, you guys should be used to these type of cycles where they hit highs and then they retrace 70, 80, 90% off highs. And then so for some, and somehow they do come right back up and then they break those highs. And again, we go through these cycles. Is it another cycle or is this going to be a real downturn and lead into more bearish market? So if you're trading crypto, it is highly volatile. Please use proper risk management trading crypto. Oil prices drop as more ships move through the Strait of Hormuz. Crude oil is down almost 4%, down to $68 a barrel. So if you remember, we were trading crude oil was $100, $110, $120 a barrel. And now see how quickly things can retrace down. So if you're patiently waiting to buy some oil in the futures market, this now might be opportunity, but we do have further news. We don't have a solid peace negotiation as of yet, so anything can happen. But crude oil is down 4%. Lots of things. Volkswagen job cuts, 100,000 jobs and 4 plant closures are planned. So Volkswagen, one of the world's largest car manufacturers, is down almost 4%. And you can see 100,000 jobs and 4 plant closures. So a lot of businesses, a lot of corporations are laying off individuals, cutting plant closures. Corporations are closing, not just auto manufacturing, but retail, also in tech. You see all day, every day, there's always some news regarding something. Maybe AI has something to do with this. Maybe the demand for Volkswagen vehicles, the pricing of them, everything. It could be a shift in market sentiment. globally. Semiconductor stocks retreat over worries about memory costs. Lots going on. China's collapsing crude oil imports to fall further in June. Okay, so that's our news, guys. There's a bit for everybody. Whatever you're into, I'm sure you'll find an article that you can read and enjoy, whether it's tech, whether it's automotive, whether it's crypto, whether it's gold, commodities, whatever you want to look at, I'm sure that you'll find something. Okay, in our Discord, guys, we just sent out a signal. It came out just earlier, right over here on a long on buy gold. It was one of the fastest trades of the week, right over here, and you can see we were looking for buys above 4,078. Right there, it closed and took off. If you missed the original move, there's a retracement, and you can see how it retraced all the way right back down to the location, exactly where we're looking for those buys at 4,078. You see a wick and a wick. I don't see any black volume closing below 4,078 on this image to suggest that it's bearish, and you can see it's holding and continue to move up. There's a nice 2 wicks. There's equal identical lows. We call those tweezer top bottoms, and a nice bullish engulfed candle closing, and you guys know the drill. That's a nice bounce off of there, and look at your next candle, bullish ignited, no drawdown on the candle, and continue to fill its wick and do its job and get back up to these 3 wicks over here. And that's an easy trade for on the 5 minutes for 130 pips. Who doesn't want that type of trade? I'll take those all day, every day. You know, anytime you can get into a trade with minimal zero drawdown and it approaches 100 plus pips, that's a fantastic trade, in my opinion. You got to lock some profits on that, okay? Because we're seeing right now 100, 200, 300 pips moves. They can retrace rather quickly and come right back down to your entry point. And if you don't have a break even, they'll target maybe your stop loss. And then you can turn a nice profitable trade into a loss, and then you're going to have to review that and come back from that. Okay, so if you need signals, guys, we do send these out throughout the week. Right over here, these are, and this is part of the premium plan over here at SST. And there's trade management regarding why they come out like this, and how to trade them as well, and reminders about moving your stop loss to break even, reminders about taking partials, things like that. We need to be reminded constantly on a daily basis, as do I, because we forget, and in times we get greedy. So it's good reminders, guys. We do have the free Telegram available at the top of YouTube for all of you guys. Here it is with all of our live YouTube links. Guys, if you want to join the team over the weekend, here's the 50% off promo on all of our premium plans, where you'll unlock the Discord and trade with the snipers 24 hours a day. You'll unlock all of the live sessions, all the private Zoom sessions with myself and Dave throughout the week, where Dave does COMEX and Wall Street Tuesday, Wednesday, Thursdays from 8 to 10, and then we do everything after Dave. The trade signals, ideas, and all the education. Use this code SSTJune50 over the weekend if you want to sign up, because this won't be lasting too long, this code, okay? And guys, here's the giveaway alert that we're going to give away 1 month of the AI trade ideas and a premium plan with us at SST. So you have to you got to be enrolled in our free Telegram that's pinned at the top of YouTube, and this AI trade ideas Telegram, in order to be the winner, okay? And this is where you get trade recaps before and after of the trade ideas, how we send out, so you can get more familiar with how they work and get to know how we do these things prior to taking these trades, okay? You don't trade blind. That's not a good trading strategy. You wait and you watch at these levels, okay? And then this was Dave earlier this week, trading with the snipers, educating in there, catching some pips and learning. And the free Telegram is available, pinned at the top of the channel. And guys, if you want to join, come to our website, and everything that you need is on the website. Lots of education on the website. website. There's blogs, there's courses, there's tutorials, there's quizzes, there's webinars, there's boot camps. There's tons and tons and tons of education on the website that you will find. And refer to our live sessions. We're going to continue with this schedule all summer for this month of June, July, August, going into September. If there is any NFPs or live FOMCs, we will schedule those in as well, as long as we're not at a World Cup event, okay? And here's your free blogs for everybody under our blog section, okay? And thanks, everybody. Welcome, everyone. Over 200 viewers on YouTube. We appreciate you guys, and all of you guys in Zoom. I appreciate you guys. If you guys can kindly leave us a like right now on the YouTube channel, we do appreciate it. It helps stimulate the YouTube, helps it get bullish so that it can start to reach and push us out further and further and further around the world. So anyone searching for some type of live trading, live analysis, education and entertainment in the stock and Forex and futures markets, anything to do with a candlestick, hopefully maybe we can trend and you guys can be a big part of that and help grow the channel. We just hit over 100,000 subs. I got the play button right here on my desk, and life is good over here at SST, and I hope we can continue doing our job over here. We can stay motivated to continue to come here and be live. It's 6 years running now, every single day on YouTube, and we're going to continue this hopefully for the next 6 years to come, and maybe we can take this up to 200,000 subs with your help, guys. So thank you guys so much. We appreciate you guys. You guys are a big success, part of the success of this channel, and we could not have done this without you guys. So continue. We're moving up to all-time highs on our subscriber count. So thank you guys. Now let's get into it. I'm going to do an analysis on gold. This is how it's trading on the 5 minutes. You saw that there was an opportunity where it looked like a M top, but you see right there, do we see a black body close below? I don't see one yet. Like if I was to draw a line of support right here, I don't see a black body closing below 4,078. That's where we're looking for those buys, right? And you can see it's acting as a static level. So there was that buy I just showed you on the signal right there that moved up for that 130 pips. It came right back down. So had you not done anything, you can see how a trade can retrace right back down to your entry point, and it's bouncing again for maybe another 30, 40, 50 pips right now. But we do not see a black candle closing below. I see an impulse, impulse, impulse right now, still holding. Okay, so keep an eye on that, guys, because if we get black candle closing below, there could be a retracement to come back down and maybe test 50% of this big blue candle, but more than likely retest this area right over here, whereas prior resistance. And you can see like right here, kind of a fake out of a double top right here, where it came up one top. There's the support right there, 4,044, came up again. There's the second top, and there it's where it's pushed down. But you see again here, there's no black candle that closes below to push it down. It comes up with a big bullish ignited candle, and then look at how it uses this red line, which was resistance, resistance as support to take us through there. Okay, so that's right there. There's a lesson on how to use support and resistance as static lines. And the only thing that moves is the volume. That's the only thing that's variable. So this red line will always be static. And the only thing we have to watch for is the volume. If it closes black below, it may retrace back up to here and be resistance and get rejected, just like yesterday's trade, and then push back down, right? If it continues to stay with blue volume above here, it could continue to use this same red line as support to continue to fill those wicks and create new highs, okay? So you can basically trade off of these static locations all day, every day. But this is just, this support was just made right now, like an hour ago, okay? So it doesn't hold as much weight as if there was a support from a daily or a 4-hour or a weekly, because those hold higher weight. So the way how I do it is by conducting a top-down analysis, okay? So that's what I'm gonna do now. So if you guys are trading this, please understand that I'm doing a top down. You don't need to spam the chat or tell me, Ron, are we buying or selling? I'm doing analysis. You can do whatever your heart desires, but just please use proper risk management when you're doing that, okay? And before we get started, I just want to say welcome to everyone. Good Friday. Juma Mubarak to everybody. Welcome everyone on Zoom. Vinay, welcome. Good morning. Tulumi, thank you for joining. Mike, welcome. Who else we got? Sang, David, Sergio, Rohan, thank you. Bruce, welcome. And Rahul, welcome, guys. And everybody on YouTube, thank you guys for joining as well. All the way from the top, we got Frozy, number 1. Thank you for joining. Remy, welcome back, Remy. I remember you from a long, long time. If this is the same Remy, thank you for coming back to YouTube. I appreciate you. Joe Hiff, welcome. Dom, thank you for joining, brother. I appreciate you too. And Tashi, welcome, guys. And everyone else, I don't have all day to mention all your names, but shout outs to everybody else, okay? Let's get into this. So let's start top-down analysis, gold, on the daily. And if this is, if you want to learn how to do this, I'm more than happy to teach this. It's my style of doing analysis. And the reason why I do it is to figure out the higher time frame bias and set myself up for high probable setups at the desired points of interest on the particular time frames, and also find points of control and things like that. So I'll show you how to do it. Right now on the daily, we're trading down here. So today looks like a bullish daily candle so far, right? Yesterday was a little inside bullish bar, but it's still, we're sloping down. So it's still counter trading. It's still nice and bullish, but you can clearly see the trend is still pushing down. So let's start. Before we start to talk about today's volume, like right over here, we need to talk top-down analysis, right? So I'm starting all the way up here. So let's highlight the all-time high of gold right here. Let's just talk briefly about the day when it got up here, so we have it fresh in mind. Today is June 26. When we hit the all-time high of gold, it was the end of January, January 29 going into February. So you can see it's been a couple months now. And now look at each successive high since the all-time high. We've got a lower high, lower high, lower high, lower high, lower high, and we're all the way down here. So it's clear that there is a trend pushing down. We can put the trend line, start it from here, from the all-time high, and if you want to bring it wick to wick, you're more than welcome to do that. Just keep it consistent. If I go to the bodies, I told you guys yesterday, I'm a big hugger. I love hugging people. So if I ever meet you guys, don't be surprised if Ron comes up and gives you a big hug, okay? I'm a hugger. So what I do is I hug the candle bodies. You see how I'm hugging right there? That's a big hug I'm giving to these candles right there. So I'm going to make it orange to illustrate that this is an all-time high trend line, okay? You guys following me? Now, what I'm going to do is I'm just going to continue to extend the line exactly how I hug these candles. I'm not manipulating it by changing it, and I'm just going to do right there from point A to B and now extend it, okay? You guys see what I did there? And then now you can verify. Now you can see when we came back up in May, we were right back into that all-time high trend line. Did we break it? No, it continued to hold and push down. We came and touched it again right there, end of May, May 29. We came almost up there again, mid-June, and we're all the way down here. So we are still sloping down, okay? We have not broke this trend yet. Gold has not broke the trend and used it as support to continue come back up. So we are in a clear monthly, weekly, daily downtrend, okay? You guys got that? Hit the likes on YouTube if you guys are following me so we can continue. Hit the likes that we understand. We are in a clear downtrend from the all-time high. However, someone's going to be a smart ass on the call, and I understand. I'm a smart ass too. Someone's going to say, Ron, how can you say it's in a downtrend when we're in an uptrend all the way from 2023, 24, 25? Yeah, you're absolutely correct. If we're analyzing all the way back a couple of years back, yeah, it's bullish, very bullish, right? And this could be just considered as a a pullback. So you could consider this whole wave coming to the all-time high, and then you see gold is pulling back right here, and definitely it could go all the way right back up. That would be a double top all-time high, maybe a new all-time high. But yes, overall, technically, if we're talking years back, we are bullish, right? But I'm talking from now, the all-time high, we're sloping down, okay? We haven't found any good solid support building or double bottoms yet. Not yet, okay? So let's continue now. Following from this all-time high where we came down, where did we come down to? Okay, where do we have some points of interest? Okay, so let's find some points of interest. We can find that wick right there, right at those bodies. You can find right there. Okay, so I'm using now yellow lines for the daily. This is a great point of interest. This is what I will be trading off of. On the 5 minutes, on the 15 minutes, on the hourly, you can see our daily candles are not at that yellow line yet. Okay, we're nowhere near that. But what I do is I place an alert there. I add an alert, and it's a static alert. It's got no expiry date. You know, when you're trading options, options have expiry dates. There's options that expire today. There's weeklies that expire Friday at 4 p.m. every single week. There's monthlies that expire at the end of the month. But these points of interest have no expiry date. Do you guys understand what I'm saying? I can leave this static for months and years down the road. And when gold ever decides to come up and tap that yellow line, I'll get an alert. I'm sure you guys know how alerts work in trading. Okay, TradingView will give me an alert. I get the alert on my phone, on my mobile. I get it through an email. I get it at my trading station. There's multiple alerts I get in the house. Okay, and then when I get an alert, I don't just close my eyes and just hit the buy and sell button blindly. I see 90% of traders do that. I don't do that. I get an alert, and then I go to my particular time frame. My time frame is mainly 1 minute, 5 minute trading, and I watch what happens there. I look for a rejection. I look for 2 rejections. I look, maybe it will flip and close, and maybe it will be support, and I buy off of it. But that's a desired location to trade off of, because I can see multiple days traded at this level. Let's go back and understand how much it traded here. This was 3 wicks here, the previous all-time high of gold. This exact location, 4,375. Now we're seeing for 3 days, it tried to break this right there. You can see it came up, rejected. Next day, right there, wick again. Next day, wick, and then push down. So that was a previous all-time high of gold. We were trading it live at this time. I remember that I was saying it's a 4-bar M pattern, up, down, up, and there's your down move. Okay, now let's not stop there. This is the hack of a top-down analysis. When you identify a zone or a location or a block, whatever you want to call it, stretch it into the future. Okay, remember, if you get an alert, look at what happened over here. It came, this was October, and it came back in December. So that's almost 2 months. It came back in. Had you got an alert when it came in there, you would have got an alert, and you see it got rejected back down. It continued to trade in there. Look at, again, a wick in there, rejected back down. Then some blue volume started to close in it. Then it started to consolidate. Look at the time and date too, December 19. Then we broke out of here Monday, December 22, right before Christmas and the New Year. There's the closing body, okay? So that was the new all-time high of gold. Now, when something like this happens, this is where we learn, guys. Learn now. The buyers are in control. The buyers closed above the zone with conviction. There's the volume. It's a rather large base volume candle. Okay, so first thing that I do is I flip the zone to complement the buyers or sellers, and I color code my zones. I make it green, right, for buyers. Do you guys understand that? Now look at stretching it into the future. Then we took off. That's how high we went. So there's another point of interest if you want, right there. There's a body and a body, Okay, and we can look in the future how right there, see the wick, how it acted as support. So you could have had another alert at that point of interest. There's a body and a body. Then we have the black candle come down, and look at where it comes down. We traded in the green zone again. And then look at the new year. Happy New Year, everybody. Monday, January 5th to start the brand new 2026 year. Another bullish, ignited, engulfed candle, filled those wicks and closed above, and continue to take us to the all-time high. How? It closed above, see the point of interest, and then it pulled back 5 days later and used it as support. And that's what took us to the all-time high. And with this zone, continue stretching it into the future. See, this big selling pressure came down off the all-time high and bounced off of there and came back up. Here is another point of interest, right? There's a body close, ignited body open, and look at the wick, exact location, 4,650. So there's another daily point of interest. And what the thing is, everyone thinks that you have to do this every single day. No, like, guys, I do this every day with a fresh chart with you guys to teach you guys how to do this. But if I wasn't on YouTube and I was trading by myself, I would do this, and this is how my chart would look every single day. I would not be deleting and doing this over again. I told you, these alerts don't expire. So these are static levels. What I could do is I could clean up my charts on the lower 5 minutes where I'm doing those things, but on the daily, I can leave these yellow lines forever on my chart, right? We're not trading anywhere near these levels. We're down here, but that's what a top-down analysis is, okay? So I'm just showing you how to do a point of interest. Everyone asks me, Ron, where do you get these yellow lines from? That's what I'm trying to show you right now, where these yellow lines come from. Now, let's stretch this green zone into the future. Now we can talk of something that happened with Donald Trump, right? You guys probably know that the market was coming down. Over a weekend, there's Friday, this was going to be a Black Monday. It was a Black Monday, but it didn't close down there. It came. Remember, guys, we did this live Monday at 7 a.m. We started the stream. I remember this day, March 23. And it was black, 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 black. You can place a line at the lowest point down there. That was where it came down. But look, then at 7:03, Donald Trump tweeted, or Truth Social, whatever the hell you guys call it. 7:03, he said, the Strait of Hormuz is open. Everything is good. Then the market, as soon as he made that, jumped up 1,000 points. It came up on 5 minutes, if you guys remember that. And look at where it closed, above the zone. So to me, that shows me they came down there and they picked up all of that liquidity down there, right? And look at how it closed. Next day, look at what it did. It came down, retested green zone, bounced off, came back. Look at, that's a double bottom, how it built there. It came down, back up. There's the neckline. There's the second bottom. And then there was the drive out of there, right? So can you see how that same green zone is still technically holding up? How to place an alert. Okay, guys, you got to know how to do this. Okay, how to place an alert. On TradingView, right here, this yellow line, right click, see right here where it says add alert on horizontal line, add it. Now it says how to create it, condition. How do you want it? You can go in this, go down the rabbit hole this weekend, and you can set it up the way how you want it. And then I create it, and that's it. And then you'll see a yellow clock there. See a yellow clock, a yellow clock. It's gonna alert us probably right now because it's right at the highest point of the day. This wick, look at, guys, as I'm speaking, Monday, March 23, the low is our high today, right at 4,100. Okay, you can see how it's now, the volume is coming right up, and it could get rejected there and pushed down, or we could technically break this, close above, and we could be making 4,100, this line, our support going into next week for gold to continue to come back up. Okay, now, sorry, the green zone. Continue stretching it into the future. And then over here, see how we have a black candle come down Friday, June 5th? This was a rather impactful day in the markets. This was NFP Friday, first Friday of the month. I believe next Friday is the first Friday of the month. Let's see real quick. Let's go. Let's do our research right now for next week. Monday right here. Okay. Tuesday, June 30th. July 1st, happy Canada Day over here, is a Canada bank holiday. You can see right there, all Canadian banks are closed for Canada Day. Then we move into Thursday, July 3, and Friday, July 3rd. Normally, the first Friday of every month, we should have an NFP, but we don't. Why? Because US is on a bank holiday, okay? So you see right over here, it's Memorial Day. In US, I believe. So it's closed. We don't have NFP Friday. NFP Friday will be the following Friday due to bank holiday. It will be coming up the next Friday. Okay. And you see how the black candle does officially close below. Okay. See, black came down. And did the black candle close below the zone? The answer is yes. Okay, so what do? I flip the same zone, red. And then I can see the next day how it came in, back down. Came into the red zone, back down. Okay, we traded in the red zone when? June 15, just a couple days ago, right? That started the week, last week. Okay, look at, we traded in there 3 times. Red, 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 red. Impulse break above there, fake out, and continue to drop. And look at, there's like it came down, back up into the red zone, and back down. So continue with this red zone into the future. Okay, we might come up here maybe next week, next month, potentially. Okay, and it's right trading at that trend line, all-time high trend line, and the daily point of interest. Okay, now let's continue following this downtrend where we're at right now. So have we made a bottom so far? Yes. How do I know that? Well, look at right there. There's a wick right here on Wednesday. And then now I look at yesterday, higher low. I look at today, higher low. So there is a little bit of support here on the daily. See the body close and the body open, and I've already seen a wick inside here. So this is the start of a green zone. Everyone asks me, Ron, well, it's easy when you can see it to make a zone. Well, I'm telling you how to do it right now. Now look at how we do it. You can see. Like, see, do you guys understand? Do you guys see what I see? Like, I need to know that when I'm explaining this, you guys understand as well, okay? Today can be a Friday education class because I know when you guys learn how to do this, you can be a profitable and consistent trader on your own. You don't need SST to hold your hand and go through the markets with you. You can literally do this on your own. And I don't know how much longer I'm going to do this with everybody. I like to enjoy my life as well, but I'm inspired because you guys are learning and I'm going to continue doing this. So, but I don't want you guys to always rely on SST, myself, Dave, or the Discord. I want you guys to learn how to do this. I want you guys to learn how to go fishing and catch your own fish, and then you can eat your own food. But if you need me to come, if you can come fishing with me all the time. I love to go fishing. I'm actually going up north right after this to go fishing, and you guys are welcome to come. You guys can come, just like trading. You guys are welcome to trade with us, but I want you guys to learn how to do this as well, okay? So you see, we've now acknowledged a zone. We need to stretch it into the future, because now if it comes back in here, we could be preparing ourselves for a second bottom. There's the one bottom. Now it's coming up. Now we got to find where the true neckline is. Will it close above here into there? Let's say, for example, the neckline is this yellow line. Then let's say it comes back down. Now we're preparing for a second bottom right there. Maybe we'll come back up and break. Maybe it doesn't hold. It's not a second bottom. There's a lot of selling pressure. Then it closes below. Then red zone. It goes green to red. We close below, and then now the buyers buy the dip, bringing it back up. They trade into the red zone offers, and then gold continues to push down. Then we sell the zone. The zone is inverted. The block is inverted, whatever you want to call it, okay? But for now, it's suggesting and showing that we have buyers. And how do I know that? Because we bottomed out right there on Wednesday, and then yesterday's low is a higher low, and today's low is a higher low, okay? And then what we can do is not only, guys, this is another trick, pay attention, not only stretch it into the future. See the yellow line? I don't have an alert there. Let's alert it, add an alert, okay? And now this is kind of like back testing. So since we figured out a zone now this week, let's go backwards go backwards now. Now Ron is saying, okay, he said to stretch it into the future, but now he's saying to go backwards. Yes, this is called back testing. Back testing. I'm going backwards now. I want to see if this green zone was a zone prior. And let's look. You guys will verify with me if we see anything. Okay. You see how there was a nice zone right down here? Okay, so that's what that green box is suggesting to us. But I see a double bottom with a liquidity grab right there. So you see, there was the physical bottom. There was the liquidity grab. It looks like the zone should be right here, right? That's what it looks like. To me, it looks like it came down right there, bottom, came back up, neckline. There's the second bottom, and then there's the drive out, okay? But what that's telling me right now is the block that we just discovered is a higher low block. See, this is this block we just discovered. The original one is all the way down here. So this is where there could be a liquidity grab, okay, inside here. So what I'm saying is, watch, follow my arrows. It came down, it's going back up. Let's say it comes down, and what Ron said, it's not an equal double bottom, exactly like that, just like you see over here in the past. What if they come down? You see here how they spiked the liquidity and then came back up? Similar pattern recognition. What if they break that, grab the liquidity in that block, and then it's gone? So that's what you need, that type of further verification. So what it's telling me now, the market is making an order above this block to protect it from coming down here, okay? Now, let's follow today's and yesterday's volume. Let's get more into this now. Now I'm going to start breaking things down, okay? Let's just do one more. If we do break above here, we've got there was a body close, a body open, and kind of cut this black candle in half. So let's make a line of interest right here, okay? 4,160. There's a daily body close. There's a daily body open, and there's where we cut kind of, not exactly. If I was cutting that black candle in half, it would be exactly right there. But I want to stick where the market opened and closed. Okay, the market opened and closed there for a particular reason. So that if we do come back up, that's going to be a potential resistance area on the daily. So let's place an alert there as well. Okay, now let's go over Wednesday. Very bearish day, came down, closed, right? Look at where it closed. Here was yesterday where we opened. It was bearish. It was black, black, black. But see, the sellers did not do their job on the daily to continue to fill that wick and drop lower. The buyers came in and held it from breaking, came in, higher low, came back to the opening position, flipped the candle bullish, came back up. That was our high yesterday. And then it got rejected and we closed right there. So here's my closing price and my opening price. Yesterday and today. Look at the number 2, guys. It's a nice psychological number, 4,025. Okay, so that was our opening price. And when we opened, it was initially bearish. It was black, 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 and there's where we stopped. There's our low of the day so far. The candle has not closed, so I can't officially say that that's the lowest point of the day. So far it is. What if Donald Trump says something and gold just collapses? It's a big wick and flips and turns black, and we feel it, and then we drop, okay? I don't think that that's going to happen, but anything can happen in the markets, okay? So you see we came down, look at the low of the day, 3,982. It's above yesterday and above there. So even if you want to start a trend line at these wicks, you can see it is moving up, right? It's ascending. We've got a higher low, higher low, higher low, okay? Just showing you guys that, how there's at the wicks, the market is moving up. It is creating a depth of market below us, and it's getting stronger. It's just like climbing stairs. When you go up a stairs, you got to go one step at a time. So you can see it's climbing a stair. One step, another step is a higher low, okay? Now, we came back to the opening position. Did today's buyers do their job? You know, when we go to the markets and we go to work every day, we have a job to do. Did today's buyers do their job? Technically, they have. They did their job where they filled the previous wick and have created a new higher high. Okay, we're coming up. So we have, remember this yellow line? This yellow line is that wick right there. Okay, so it's basically today's highest point of the day. There's our high right there. Okay, so I'm going to just make it purple. to suggest so far 4,095 is our high of the day. Can we go higher? Absolutely. So if we break this, where is the price like a magnet wants to go to? It wants to go to this opening balance of Wednesday where the seller stepped in. It wants to retest this. It wants to retrace back up to 4,111. Am I guessing? No, I'm not guessing. I can clearly see where Wednesday opened. Okay. I know someone's going to say, Ron, you're going really slow. This is, come on, let's get to it. Are we going to take a trade? But guys, we have the rest of our lives to trade together. You got to understand that the volume right now today wants to come and test this location. So if the sellers from Wednesday are here and want to protect their position, they need to start offering right now. Like there needs to be offers as this big blue candle is coming in here. It needs to engage in the offers and maybe have a wick to continue to push down. Because if these buyers on the daily come through this red zone, right, and look how small the wick is right there. They could break that wick and cause a new high. And that could really change the depth of market. That could really make our double bottom even that much stronger with pending orders in there, okay? So this is what we're trading into. I'm going to leave this as a red box, okay? So we understand what the buying volume is trying to do right now, and we still have those sellers that maybe want to protect their position, and maybe that's where they want to push it down, okay? So you see it came down, and it's coming back up. Okay, it could technically come back down there, but we could easily break through this. Okay, so that's what we're going to watch on today's call. Okay, now we have some areas. If it breaks through there, just has to break that wick, and then look at the imbalance it can fill. From this yellow line to that yellow line, it's just like a black candle. There's not much consolidation. There's not much traffic in there. It could fill all the way right back up to there. That could be where the true neckline is, right into the 50% of that black candle. Okay, so now it's getting rejected. Now what I'm going to do is I'm going to now go to a lower time frame. Okay, I'm going from the daily to the hourly now. Okay, so you're going to start to see candles, but these are hourly candles. So we can see hourly was in a severe downtrend. Okay, it right up here, it came down, back up, retraced right into 50% of those two black candles. Easy sell right there. Wick, 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 wick. Continue push down. Black candle closed below. Confirmation to continue push down. We came back up, lower highs. Came back down, lower low. Came back up, lower high. Came back down, lower low. Now the hourly are building. There's no longer lower lows. You know, like how I showed you, there was the absolute low. There's a higher low, higher low, higher low, higher low, and higher low. And it's closing above and moving. So very bullish on the hourly. But now we're getting, remember that red zone Ron just showed you? That's what it is. That's what we're trading into now, okay? So let's follow this hourly candles. Let's go more so 8 a.m. You guys are familiar with 8 a.m. is COMEX and North American News. We had a bullish engulfed hourly candle. Blue, black, blue. And now look at the retracement, 9 a.m. Black, 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 black. Look at what it targeted. The bodies of the candles right there. So on what I do on the hourly is a white line. Okay? White line. Look, okay, I want to teach you guys this. I know this is when YouTube starts run. Are we trading? Are we trading? I'm going to try and ignore that, okay? Because I'm focusing on you guys on Zoom today. I really want you guys to learn this. If the guys on YouTube want to learn this, they're getting absolutely free education here as well. But look at guys, okay? How many times does Ron say the closing and opening of all candles? I don't give a shit what the time frame is. If you're a 1 minute trader, you got to focus on the close and open of 1 minute candles and see, do they create a structure? You can see right there, there was an hourly candle close, hourly candle open, hourly candle close, hourly candle open. Now look at, this was a black candle, 9 a.m. It was black, 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 black. And look at where it found the support right here at this white line, 4,045. You can see the support. Now you can see there's a wick, a wick, a wick, a wick, and a wick. Look at where there's a nice little hourly zone. Like you got to train your eyes to see this. See what I use? The white line. Now I come down to those bodies right there. That's where it was red. And then I can see it came in there again, got rejected red, came in there again, rejected red. So you see the size of the zone. We don't need to make a zone like this big. Everyone asks me, Ron, how big do we make the zone? If you do a proper top-down analysis, you'll know the exact size of the zone. There's no guessing. Okay, do you guys, I'm going to talk to you guys on Zoom right now. Do you guys understand how I just made that zone right there? Okay, that rectangle red box. Do you guys see the shape of it and the size of it? Okay, I'm not guessing. A lot of you guys think I'm guessing should I do the zone this big, that big? No, it's right there. We use the white line as the reference point, as the point of interest. I don't know any other words to call this, okay? And then I see a body close and a body open, and then I see a wick and a wick. This is the easiest time to do this because the volume has already traded and shown us. Have you guys ever heard of a footprint charts? That's a footprint. These candlesticks are leaving us a footprint. You know, when you go to the beach, I'm going to be in Jamaica very soon, and I'm going to walk on the beach. I'm going to walk on the sand. I'm going to try and get away from my wife and kids because I want to go and enjoy a vacation. So I'm going to walk away from my wife and kids on the beach, and guess what? My kids are going to find me. You know how? They're going to find me because they're going to follow my footprints in the sand. They're going to see my footprints are walking from the resort straight to where the jerk chicken is on the beach, and where the rum and Coke is, and where the weed is. So they're gonna see my footprints. My kids, watch my son and daughter. They'll follow my footprints and they'll find exactly where I am. Okay, believe me, I go to Jamaica often and they find me. So I can figure out footprints on candlesticks. That's a silly analogy, but it's the truth. This is footprints. It came up here, it left its footprint, it went back down. I can follow it, I see it again, it left its footprint and it got back down. It came up again, it left its footprint and got rejected. So that is a clear red zone, and the size of it is right at those bodies. Now, let's verify. This is where a lot of guys don't do any analysis. This is where a lot of traders don't do any type of back testing, nothing. It's just, Ron, are we buying or are we selling? Ron, are we buying or selling? I don't know what we're doing. Right now we're analyzing. We're following the footprints. Let's follow. So go into the future. Look at gold retraced right back into this zone. Did it break above the zone, create a new high, and close above it? You guys tell me. This was today at 5 a.m. Had you guys done this type of analysis, you could have been prepared to buy out of here all day today, right? And you could be literally at your daily goal. Look at how much it's moving off of the zone. Now, let's go through. I'm going to ask you guys, and you guys say yes or no. Did an hourly candle impulsively break above here and close above the red zone? Yes or no? I'm not trick questioning you guys. This is serious. And I know it might seem simple, but that's where I'm teaching you guys trading can be simple. There's nothing complicated about this. I teach my daughter this. She's almost 10. I asked her, did a blue candle close above? If a 10-year-old can say yes, I'm sure you guys can say yes. If you're saying no, I know you guys are being silly or you're just stupid, okay? And I'm saying that as nice as possible. I'm asking you, did a blue candle close above this red zone? If you need to zoom in, because you got bad eyes, I understand, right there, it closed above. There's no ifs, ands, or buts, okay? Now, what do? This is my strategy. I've been doing this for over 20 years, and I'm telling you, this strategy works, okay? I make money every day doing this strategy. Turn it green, absolutely, to Lumi. Now, what's the next thing we do? We stretch it into the future. Now, you tell me, 6 a.m., was it black, 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 and did it come in the green zone? Yes or no? And did it come out of the green zone, and did the buyers do their job and close above that wick and create a new high? Yes, okay? Let's continue. Next hour. Look at how it came black. Now it's consolidating. Black, 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 black. Did it come into that green zone and catch a wick? Yes, and close right on top of the green zone. Now we got volatility. Now we got a new candle, 8 a.m., Colmex. Did they black, black, black? Look at impulse coming all the way down, created a higher low right into that big body of that candle. And look at the buyers were pending there, waiting. And look how it came right back up and closed very strong above there, okay? So if I now want to find my hourly points of interest, I'm a scalper right there. There was an hourly body close, hourly body open. I can place an alert here. I'm getting ready to maybe catch a retracement. I got an alert on the hourly. There's a white clock. I can put an alert at this one. This is where the zone is. So I right click, I'm adding an alert there. Now, look at what happened at 9 a.m. Black, 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 black candle. 4 times. There's 4 wicks with a liquidity grab. And Let's stretch that green zone into the future. Someone's going to say, Ron, who gives a shit? Okay, we figured out the zone. Yeah, but stretch it into the future, because if it ever comes back down into there, it could literally do that, just like it did here. If it doesn't hold up, you guys know what else it could do. I give you 3 options. You know, trading is options, right? It could literally close below there. Then if it closes below, what do? The zone turns red. Yeah, you got it. Talumi, I love it how you're following me and you're doing it as I'm doing this. So you see, come in red, and then I'll sell it down to the yellow line. And when it gets to the yellow line, I know that that's a daily point of interest. This is where I don't get greedy, because I understand if I'm going to sell and that zone is inverted and it comes down to the yellow line, that's 150 pips, not 1,500, not 15,000 pips, 150 on the dot to that yellow line. And when it gets down there, I have the experience and knowledge to know that it could just bounce off of there, because those are daily buyers that want to bring it right back up to there, just like it did on that wick and just like it did on there. So if you want more than 100 and you want to break that, you need to literally get volume to close below there. Do you guys understand what I'm saying? That's how you do trading. That's how you analyze. You got to watch at each one of these specific points of interest how the volume reacts at these locations. And you're going to see impulse moves, you're going to see liquidity grab, you're going to see stop punts, you're going to see confirmed closures, you're going to see retests, you're going to see a lot of shit down there, okay? So this zone is still green, and I stretch it into the future. Maybe we come back down here next week, okay? Now, where are we trading right now? Let's follow this, okay? Bullish 9 a.m., pulled back right into 50%, come back up, buyers still doing their job, create a new high, got rejected, closed, again, black, higher low, right into the body of the candle, came back up, filled the wick right there, higher high, okay, and now we're still up here. Now we're trading into that red zone up here. Now, look at your RSI. We're getting a little overbought on the hourly. So at 70, this is like a signal for retail sellers to start selling. But we know that we could have a short squeeze out of here, and that's the last thing we want to be doing is selling. So we got to see multiple rejections. I don't even see a black hourly candle print yet. The only one was right here at 7 a.m. That was a long time ago. I just see a blue candle, blue candle, blue candle, blue candle, and another blue candle. Okay, so it could continue to be blue and break through here. But right now we got a rejection and a rejection. We might have to see another rejection. So where would the market shift is maybe a black candle closing below here, below 4,080. It's not there yet, but I can more than happy create an alert. Okay, now it's very bullish on the hourly. Okay, there's no questions, but overall higher time frame, it's bearish, right? It was bearish there. That was a nice uptrend coming up. Had you thought that it's going to continue going up there? Look at what happened. Lower high, sellers came in and they pushed it back down. Let's just go down with this whole leg. That's showing the down pressure. Now we're coming up with this whole leg coming back up. Yes, it's bullish, but it's still, even if we break through here and it comes up to that yellow line, it could still be resistance to push down, right? But then we could be coming into a green zone, and then it might have the momentum to break through there, okay? So right now we are on an hourly bullish leg coming up, but overall still bearish, okay? So if you're buying, you're still technically counter trading, okay? But it's still moving up, higher highs and higher lows. Now, I'm going to zoom in now on the 5 minutes. So I'm getting off of daily, hourly, and 5 minutes. Now, these are the 5-minute candles, how they're trading. They have wicks too. They got big bodies. They got retests. They got impulse. They got everything that we saw on the daily and the hourly, okay? Now, I'm just going in more. Remember what we were talking about here, where we were talking about a double top right there and didn't break, right? Look at how the 4,078 is still holding and continue to be bullish right there and continuing. So we've got a buy signal right over here on Discord. Let's see. Let me just refresh this. So you see how we send out signals? Look, okay? We have made consistent higher highs and higher lows within 12 hours, okay? Look at right over here. So this is that 4,078. This is how you could use this 4,000 and have an alert and take multiple buys off of the location right here. It came up, it came back down. There it is, holding, didn't break. came back up. We couldn't break any highs. Then the market comes back down. That was the M I just showed you, but no black candle closed below there. So the buyers are holding it support, and now it's coming right back up. And this big blue candle is doing its job, filling those wicks. So you still see how it's still holding as support. When I'm showing you now the live chart, this is where it is. This 4,078. Okay, so I'm just going to bring it down there. That's where we got our buy signal. 4,078. I'll even write on here the SST buy signal. Okay, and look at the 5 minutes, how they have a wick, and a wick right out here. So if I do a 5-minute zone, I can do now a 5-minute zone to give me a zone, right? And now I can stretch it into the future, and I can be looking for buys off of this. I could look for sells off of it. If the sellers officially close it below there and do that, I could look for sells. If I want to buy off of it, if it comes down, I watch and see, is there wicks, and then bounces back up. I want to watch to see if there's a liquidity grab as well. If it comes down, maybe it will break black, but does not close down there, catches a big wick, comes back up, closes above, retests this. That would be another buy signal, right? With a liquidity grab, okay? Now we're trading at the highest point of the day. We're at that red zone. Remember on the daily, just if you're joining us, where did Ron get that red zone from? Right here, where we started on Wednesday. That could be if we're trying to come up, we're trying to fill back up to that opening price. Those sellers could still be there protecting their position. These are not 5-minute sellers. These are daily sellers. That's a daily candle, okay? So when we look at it on the 5 minutes, that's that red block you're looking at above me, okay? And now you still see how it's holding up, coming back down. If you want to trade this, you can trade this, right? Just measure the zone now from, let's say, right here, the buy signal up to the highest point. It's about 175 pips from top to bottom. That's a scalper's paradise. That's more than enough for a scalper to get their daily goal in and out of here, right? But for some traders that are looking for a big move, the market right now is just consolidating in this 175 pip range. So we can neutralize it like this. And I see that there's buyers buying. I see that there's sellers selling. I see that there's buyers buying. I see that there's sellers selling. I see that there's buyers buying. I see that there's sellers selling. I see that there's buyers buying, and I see that there's sellers selling, right? It's just in a range. It's in a big bull flag that could continue to break through here, but this is a daily red zone that we need to watch, okay? So this is where we're trading right now. Can I change the volume? No. Can I make it trend? No. Can I just watch what's happening? Yes. Can I look for a trade? Absolutely. Can I trade with the trend? Yes. Can I counter trade? Yes. Do I have rules when I trade? Yes. Do I use proper risk management when I trade? Yes. Yes, yes. Okay. I need you guys to say yes to all those things too. Because I can trade stupid too. I can leverage my whole account right now. I can go 500 to 1,000 times leverage with my Fusion broker. I can go 7 figures right now on a buy and sell and go full port. And if it doesn't go my way, then you're going to see Ron will be homeless the next day, living out on the streets, and my wife and kids will kick me out of the house. Is that something that I want to do on a Friday afternoon? No. So what I do is I trade with proper risk management. I know it sounds crazy because some of you guys don't know what that is, risk management, okay? You guys are gamblers. You guys think that this is the casino here, okay? This is not a casino. This is the gold spot market right now, okay? This is not the casino. You want to go to the casino? Go to downtown, go to Las Vegas, go to Niagara Falls, go to the casino, enjoy yourself. It's Friday night. Go have a drink, play some blackjack, play some baccarat, play some poker. Go have fun, you know? But this is not a casino. This is where it's your business, okay? You are a businessman or you're a businesswoman now. This is not the time to gamble. So if you're going to take a trade this afternoon, how much are you going to risk? You need to ask these questions. How much are you risking? For example, if I'm going to risk, normally I risk 1% of my account per day, but I've already done a few trades earlier this morning and I've done well. So I'm not going to take on 1% risk. What's the point? I've already hit my daily goal today. So even if I want to trade this shit right in here, I will go down to a quarter percent of my account. Small. How many trades will I do in here? I could do 1, 2, 3 trades in here if I want, but there's nothing wrong with waiting too for something to happen. I want to see maybe a structural candle, something like that could spike in here, something that could spike down here, something that could really start to move the market. Right now, I don't want to engage and trade this shit in here, okay? Unless you're looking for, you got to know how to trade this. If you got, even if you sold there, that's 100 pips coming down. And even if you bought there, that's 100 pips going back up. And you're probably still holding. You're still holding your buys or you're still holding your sells. And you're just watching your unrealized profit go up and down, okay? Eventually, maybe you'll profit. Maybe it will hit your stop loss. But we'll continue to watch this, okay? So while we're watching this, we can add some fancy indicators on our chart to complement our price action. Now, this is a 9 EMA. Some of you guys are familiar with a 9 EMA. It's the green line. We are currently above the 9 EMA, trading right at it, okay? The 200 EMA is all the way down here. It's in our green, bigger hourly zone down there. So now when I'm looking at buy levels, this is a good buy level right there, right? It's been buy there, it's holding. If it comes all the way down there, that is a better buy. It's a discounted buy. If I'm going shopping and I'm buying something, if it's $2 today and it's $1 the next day, it's a better buy. I might buy two of those, right? So again, you could think cheaper, more orders down there, okay? But if it comes all the way down there, that's an optimal buying location. That's deeper into the depth of market. That's more at hourly structure. And we've got our 200 EMA also indicating that that's a good suitable buying area. But the market is nowhere near any one of these lines. So how do we trade those? You have to patiently wait for the market to come down here, here, or here. Will it ever come down here? I cannot tell you that answer. I'm not God. I can't tell you that answer. But what I can do is, you see, I have an alert there, I've got an alert there, and I've got an alert there. When the market decides to officially come down here, I will be prepared. And the way how I prepare is not trading blind. I don't put blindfold on and just hit the buy and sell button, or just play a game with my phone to hit a buy and sell. What I do is, there's three options, okay? Imagine that. Trading is only 3 options. There's 3 options that can happen at this location. Option 1, get familiar with these options, okay? Because you're gonna start to see them happen more often than not. It just comes down to your location and can bounce like that, okay? That's what can happen. That's option 1. Option 2, it comes down and breaks the location, but it's an impulse, catches a wick, maybe grabs some liquidity, shoots back up, the body closes above the zone. Now we know it broke the zone, grabbed liquidity, faked out the market, and if it retests this, that's option 2 to buy. That's a stronger buy signal, because now you know that they grabbed liquidity, and now they might want to move the market away from this location because they grabbed the money. That's option 2, okay? So option 1, option 2. Now, option 3 could be the one that changes the direction of the zone, okay? It could be exactly looking like option 2, but the black candle is not it. It comes down and closes black below there. So if it closes there, the selling volume, the offers overtook the buyers and broke this zone, and they've taken over momentum. So what I do is I change the zone to red to complement them. And if it comes down there and closes, I'm going to assume that buyers will buy the dip coming in. And then now the sellers who broke that zone are now positioning themselves with further offers to take the market down, to absorb their buying, and then they get filled, and the offers are there, and then the trend starts moving opposite direction. Then it's not bullish anymore. Then it's sellers are in control to come down to that yellow line. Again, it might close below the daily, retest it as support resistance, and maybe drive back down to the bigger green zone or maybe our low of the day, okay? Does that make sense, guys? That's basically top-down analysis and trading in a nutshell. Now, a lot of you guys came here to see live trading. Okay, so let's look for live trades now. Okay, so it's still bullish. I can see on these 5 minutes, it's still ascending, right? There is a little bit of a trend line still pushing up. What time is it? It's almost 12:15. Oh, to put that while we are watching, can you put the long trade from SST on the chart so we can follow it? Yeah, absolutely. Like this. So we've got the long buy right here, and I'll watch as we move into the red zone profits. Okay, no problems. Okay, so this is coming from our Discord, the SST buy right over here. So what I mean is I'm just showing you guys how we have the buy signal. Okay, so there it is, the exact location. Now we're moving up, but I'm showing you we're approaching 4,100, but we're getting into that bigger red daily zone. Okay, so we can watch. Maybe we'll have a short squeeze and maybe we'll break right through here. Okay, because I know some of you guys are in the buy from our Discord, so we'll continue to watch it. Okay, guys. Also, NASDAQ. You guys remember NASDAQ's AITradeIdeas.com we gave it this exact chart. Okay, so it dropped for 500 pips, right? And I want to break it down real quick to show you. So remember this, the AI Trade Ideas. This is what we're giving away today. Remember how we plotted this chart on the daily NASDAQ, and it told us the bear sentiment. It told us the entry price where it's a sell and a suggested stop loss. And now it gave us the entire analysis. And what we can do is, right, we did it on a daily, but I want to show you how price action trading works as well. Okay, not everyone is a daily trader, but we can use daily analysis and we can trade at whatever particular time frame you trade. Okay, so if you're an hourly trader, let's take a look. When would you have got an alert? Okay, so you see we did it, remember on the call, when we placed it. Now you can see when it started to come down, okay, in the futures market. You can see there, 8 p.m. hourly candle closed below, right? Then it came back into 50% and broke those wicks and started dropping all the way down. As it came back up, it came all the way back down and broke, and now it's coming right back up, okay? So if you're an hourly trader, that's where you could get your confirmations, okay? If you're a 15-minute trader, okay, let's see what happened. Let's review this, okay? So look at when you got your 15-minute body. There was the impulse. There's where it came up and closed right there, 8:15. Look at how it closed as a shooting star. And as soon as, look, it opened, it was bearish, 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 but did it fill the next 15-minute wick, okay? Did it do its job? Remember I told you, every candle has a job to do. That technically closed below there, and look at where it opened and came down black, black, black. But look, it did not break that wick. I can show you right there. And then it came back up bullish and was a fake out and closed above and then took off bullish, okay? And then it came back down. Why? You should, if you're a 15-minute trader, you should have this marked on your chart and see that it came back down. And then look, again, black volume closed below. Now it officially pushed down, came back. Look how many times it retested this. And then look at after 9:30 where the big selling pressure came in, okay? So if you're a 15-minute trader, you have to understand how price action works as well. You don't trade blind either, okay? If you're a 5-minute trader, you can utilize same shit, okay? Let's see where we could have got some signals on the 5 minutes, okay? The signals came down and closed below. Is that, yeah, it might be suitable to take a sell, but did anything break any lows, okay? Yes, it just pushed down for a scalp on the 5 minutes. You know, when I get into some trades, it drops for 40, 50 pips, but that's it. And then look at what happens. It doesn't break the low. Look, it's an equal low with that time, 350, and right over here, 630, equal low. Then it came back up. It did drop for 50 pips, and if you don't have a break even on a scalp, you can see what happens. It'll target your stop loss, okay? But as we're watching this as a static location, it came back, retested it with wicks, and there again, it closed below, and then now it officially pushed for a new low. Then when it came back up, the offers were there, and there was the big redistribution, okay? I know sometimes even on our live calls, we get into trades for 50 pips and my bias is bearish. And then sometimes it comes right back up and hits me at break even. We end the call and then the big move happens. I understand that because we're trading 5-minute candles. We're not sitting on hourly or 4-hour. I would love to sit on long candles with you guys and talk and analyze and stay in trades for all day with you guys. But sometimes when we're scalping, we got to watch what we're doing as well, because I understand that a lot of traders over leverage. So I understand that 50, 60, 70, 80 pips can go down and can come right back up. But as the market on the higher time frame is collecting offers, then they redistribute it. Okay. So now you can see even that big move for 400 or 500 pips, you can see it comes right back up to the location. Now look, again, we're still below here where it's trading. Okay, so that was from the NASDAQ AI trade idea we got from over here. And it technically is running, it ran 300, 400, 500 pips. So you can utilize that trade ideas by implementing a chart on the daily. It will give you, spit out some information, and you can watch it on whatever particular time frame you trade. You can watch it on the 4-hour, you can watch it on the hourly, 30-minute, 15-minute, 5-minute, 3-minute, 1-minute, whatever is your trading style, okay? Guys, if you're learning a little bit today, we're taking a little slower on a Friday. We're learning. Hit the likes. Subscribe to the channel if you're not subscribed yet. We do appreciate it. Let's see, we're about 70 subscribers away from hitting 103,000. That would be great to do on a Friday. And thank you guys. We appreciate it. Okay, so you see how the buyers are having difficulty breaking it back up here. So it's coming right back down. We might get maybe an official push back down back here. Maybe it will reverse and then sell off of here. Okay. Mike, amazing. You're absorbing like a sponge. Perfect. I'm going to call you SpongeBob. I'm going to call you Sponge Mike. I love SpongeBob and Patrick. And guys, a lot of movies are coming out. I'm a big movie guy. This weekend, we watched Toy Story Part 5. We already saw that. We're going to watch Minions is coming out very, very soon. The Minions. I love the Minions. And the one that my son and I really want to see is the new Spider-Man is coming out. That's going to be an amazing, amazing movie. And in August, for all the old guys out there, Fast and the Furious is coming out. I think Vin Diesel is 160 years old. That's coming out as well. Guys, did today's analysis help you a little bit more? So I want to give you guys something when you go into the weekend, that when you're starting to do your own analysis, now you're thinking about points of interest, you're thinking about zones, you're thinking about looking at overall structure. You're going to set yourself up with maybe a few alerts to go into next week, and just sit, in my opinion, just sit and wait. Okay, the way how we make money in these fast-moving financial markets, they're very, very volatile. They're very erratic. There's news happening every day. It doesn't help with Donald Trump as well. But we can sit and position ourselves and wait for the market to come to us. In my opinion, that's the best way to trade. Let the market come to you, and then you analyze and make a trade. Don't try and force the market to move. Don't try and force trades to happen. As soon as you start doing that, I can guarantee you're not going to be successful. How do I know that? Because when I force trades, I end up getting stopped out. And then when I sit and wait for these alerts to come to me, I do much better as a trader. Okay, I'm not saying that. I'm talking pure facts. as when I trade. When I feel like I'm forcing a trade, in the back of my mind, I know that it's not a good trade. It's not an A plus setup. It's a forced trade. I'm forcing something to happen. When you force something to happen, it's not natural, right? Anything in life. If I force something to happen, it's not going to be a good outcome, okay? When things come naturally to you, then better opportunities happen. So that's how trading is. And that's why all of you, and I don't care how long you've been trading, honestly, I'm saying this with the most respect. I don't care if today is your first day or you've been trading the markets 30, 40, 50 years, okay? You have to learn patience in trading. I know it sounds cliche. I know it sounds, everyone says that, but you literally know that you got to be patient in trading. If you haven't realized that yet, then I'm going to tell you, you've got a lot to learn. I know how far behind you are if you don't understand that patience is the name of the game in trading. Okay. And once you learn that, the game will change for you for the better. And I know a lot of you guys are working on it. Okay. And it takes time. It took me over 3, 4, 5 years to learn patience in the markets. I was very impulsive trader. I'm a scalper on the 1 minutes. You can imagine every 1 minute candle looks like a setup. And 1 minute trading and 5 minute trading requires the most patience. It requires the most discipline, because look at all these 5 minute candles. Every single candle looks like an opportunity to take a trade. But when you're in a range, you're just in a range. Oh, thank you, Spay. You've been watching us for 8 months and respect our trading skills. Thank you. I respect you for that comment as well. I hope everything you're learning with us and can continue to learn. And guys, you have to understand, okay? This comes with maturity as a trader. You might be staring at the charts for 2 hours, 3 hours, and 4 hours, and there's no trade. And you just have to accept it, okay? That it takes a lot of discipline to learn that. You might be staring at this range for the next a whole afternoon, and there might not be a trade. And you got to accept that. You got to understand the markets are open Monday to Friday every single day, pending bank holiday. Okay. They're here. They're not going anywhere. You don't need to necessarily trade the last 20 minutes of Friday afternoon just to say that you gotta get a trade, because it's not going to be a good outcome. And then you're probably going to get stuck holding it over the weekend. And then Sunday night opens up and you're in 1,000 pips of drawdown and you're scratching your head and say, Ron, what the hell happened? Well, I'll tell you exactly what happened. You don't need to trade, right? If the trade is a nice setup, then you go in. And when you go in without being scared. You go in without fear. You go with confidence. You go with conviction, because it meets your requirements. You have a checklist when you're trading. You should have a checklist. Did you do your news review? Yes, check mark. Is there any high volatility news during your trading session? Yes or no? You did that. You understand that. Did you do your top-down analysis? Okay. Believe it or not, there's some traders that trade with absolutely no analysis. They just play bingo every day. Okay. They're guessing, will this blue candle go up or the black candle go down? That's what they play. That's not trading. You're playing bingo. You're playing tic-tac-toe. You're playing games. Okay. I don't suggest that. I suggest you have a checklist in trading. Did you do your top-down analysis? Did you place alerts? Did you place zones? Yes. Okay. Is there a direction? Is there a trend? Is the market trending or is it ranging? You have to understand. If it's in a range, right away your brain should be telling you, I should be limiting my trading. It's in a range. Or I need to have the mindset that I need to pip and dip out of a range. Like, we're in a range right now, but if it goes up, you can be in a buy, 100 pips, you can close. You can sell. 100 pips, go down, close. Like, you can go up and down, but the market is not moving in a direction right now. It's just trading sideways. So if you want to trade this, you have to have that range trading mentality. You got to know to pip and dip out of here. Because if you're holding trades, you can see buyers are holding and it goes back down. Sellers are holding and it goes back up.
And it's just playing this yo-yo up and down, up and down. It's frustrating the buyers and sellers right now, and we're still stuck in here. Okay, and then the next thing, does the market come down to you naturally? And then you look for the patterns that you recognize. Those three options that I gave you. Do any of those, does the volume meet any of those requirements of those three options I gave you? Is it doing option 1? Okay. Is it doing option 2? Or is it doing option 3? Okay. And when it's gonna be one of these options. There's no other things it can do, right? It's gonna be either come down here, bounce, just like it came down here, bounce, back up, bounce, double bottom, and then broke out. There it was. If I was in here, okay, let's do this. I know it's hypothetical. I hate this shit because when it's live, and then someone says, "Well, Ron, you're just talking." I know, but I want to show you guys what you need to look for when you're trading. Just like what we're trading right now. This was a range right over here. Okay, we can look now. We can verify. It was 9 a.m. 8:55. It came up. Impulse broke out, and then it came back down black, and then it came back up blue, and then it came back down black, and then just like here, how we're going up blue, black, blue, black, blue, black, blue, black, blue. Okay, same shit. But what I'm watching for is above or below this zone. Okay, just like here. That was an impulse. Did any blue candle close above? No. Did any black candle close below here? No. So you see how you consolidate the volume. You're smart, okay? You guys are very, very smart people. I know that you guys are smart because you guys are subscribed to Stock Sniper Trading. That's how I know you guys are very, very intelligent people, okay? You guys are on the right side of trading and educating. Look, did this blue candle close above at 940? Yes, no, or maybe so. You guys need to give me a straight answer. I'll do it for you. It's pretty obvious. The answer is yes. Okay. Now, look at how the candle opened and it came down and retested this location where that body closed, that body opened, right? And there it came down and retested. It came back up, it popped, and it closed as a spin top candle. Okay. Anywhere here on this candle or this candle, you could have taken a buy. Why? Am I guessing? No, because the buyers were buying, sellers were selling. Buyers were buying, sellers were selling. But the buyers closed above with conviction. Okay, you can see it. There's the volume. So wherever you take your buy, let's say it was on this candle, you take your buy, for example. Where would you place this stop loss now? If you're a very, very tight trader, you could be right below that retest wick. Okay, I've been known to do that. Very tight stops when I'm trading larger lot sizes and I'm scalping for small pips. Because sometimes when I take a trade, it goes directly right into profit, 20, 30, 50 pips. And with a bigger lot size, you're not playing games. At least I'm not. So, and then I go right away to a break even. But if you want to be tight and conservative, right? You could be, but what if the next candle comes down, stops you out, then takes off? So you got to give it room to breathe, right? And what about placing stop loss below 50% of that big bullish candle? You could do it there. How about if you really want to give it room to breathe, you're below the entire zone, right? But that would be a stupid R&R. You're risking a dollar to make 50 cents. Makes absolutely no sense. So then your reward would have to be targeting a bigger move. And so what we're doing right now is the same thing. We're in a range and we're waiting for, will up here, will a blue candle close above? Will it come back down and retest this and then take off to up there? Or will it invalidate our buy signal, close below, and then shoot down to there, right? I know that gold's not going to trade in here all day, every day, okay? Eventually, it's going to break out of here. So that's the nature of the game, is waiting for it to happen. Sorry, guys, there's not like the amazing volume to be trading right now. Wow, that's kind of rude. Shahab, now tell us what to do. Wow, what happened? Where are your manners? I have to tell you what to do? I'm not telling you shit. How about I tell you what to do? Use some fucking manners. That's very rude of you. I don't work for you here. Last time I checked, I'm not here working for you. I don't need to tell you what to do. I'll tell you what to do. You need to learn some manners. Show some respect. That's what you need to learn to do. I'm here trying to teach people how to trade on my free time on a Friday, and I got to listen to shit from like people like you. Who talks like that? You think I'm going to go up to someone and tell them, now tell me what to do? If you said that in front of me, I'd probably smack you right in the face. Learn some respect. This is a problem with this generation. There's no more respect. I'm an old unk. You'll get slapped right in the face. Guys, why don't we tell him what to do? Like Mitsubishi Rikishi yesterday, his stop loss was our TP. We've got another guy, Shohab. Why don't you tell him what to do? What should Shohab do right now? Trading in this range. Let's tell him what to do. Let's go full port. Let's go full port account. Let's see someone blow up their account on a Friday. Let's see someone be really stupid right now. Let's give them some stupid advice and see how dumb they are. So Shahab, this is for you. Go full port right now in this range. Go for it. Let's flip a coin. Here, I'll flip a coin for you. Let's flip. Heads is a buy. Tails is sell. Let's flip a coin. I'm going to flip a coin, guys. Full port. No risk management. Fuck risk management. It's Friday. Let's go. Let's gamble today. Okay. Flip the coin. It says tails. Tails. Tails is, okay, so I'm going to write this down. It was, we're going to go full port for Shohab. Full port your account. Go for it. What the fuck? You live once. Who gives a shit? It's your money, not mine. Go full port. Go trade in a range. Go range trade. Go for it. Let's give him his trade, what he wants. Let's go range, full port account, range trade. We flipped a coin. Flip coin. This is a new strategy. Flip coin. It was tails. So you're going to sell. So there's your sell signal. Go for it. There's your... There it is. There's your stupid Friday. Here's your here's your Friday stupid trade. Go for it. That's for you. There you go. There, I told you what to do. Go for it. The coin told us what to do. That's what you're doing. You're gambling. So go. This is called the gambling strategy. This is for Shohab, who wants me to tell him what to do. I'll tell you exactly what to do. How about you go fuck yourself? Gamble your account. Go. There, I told you what to do. Good luck. See what NASDAQ is doing. Yeah, look at NASDAQ. NASDAQ is pretty nasty too. It's not good. It's not a good daily candle, right? We're stuck in a range this entire week on NASDAQ, like right in there. Look at the hourly volume. Like, is this something that you want to trade this afternoon? Ask yourself. Like, we're on NASDAQ now. We're off of gold, okay? Look at it. Is this something that you want to trade this afternoon? Even if you go to the lower minutes. 5 minutes. Ugh. Like it's just scalping. Like I don't know, guys. Like I'm going to be done off this call in a little bit. It's up to you guys if you want to continue to trade this afternoon. You know, I would walk away because we're smart that we know that Monday is a new week. It could trade a lot better coming next week, unless you want to engage in this. There might be a little move come after 1:30. Remember, President Trump is speaking today. Right over. Let's go back to June 26. Okay, so President Trump speaks at 1:30 p.m. He can talk about anything. He's due to speak at the Faith and Freedom Coalition's policy conference in Washington. Okay, you never know what he's going to talk about, and you have to be prepared. Okay, so I'm just gonna get rid of this. I was just trolling that guy, but let's get serious here. Is anyone in a trade right now? Okay, we're gonna get serious now. Is anyone buying? Is anyone selling? What are you guys doing? Sidelines? I'm on the sidelines. I'm watching right here. If anyone is a psychologist to help me with YouTube, I need some help. If anyone can help me to deal with people on YouTube and you have a psychological background, please help me. 'Cause sometimes I lose it on these calls. Okay, so we are coming down. So I guess the gambling strategy worked out here. Flipping the coin is it a good strategy? Should we continue to flip coins when we're trading, or should we continue to analyze the markets with a top down and look for structure and things like that, or just flip a coin? Simon, nice. You're running 100 pips on the US30 sell, not confident on it, so stop at break even. There's nothing wrong with that. There's nothing wrong with that. Anytime you're at a break even, this goes across the board for anybody. Think about it. When you're at a break even, you have no capital at risk. Okay, that's the easiest trading mindset to be in. Anytime you're in a trade and you're in the money and you're at a break even, you cannot lose any of your money. So that's the best position to be in as a trader. Yes, it sucks when you're up 100 pips, 200 pips, and it retraces all the way back to your break even and takes you out. Then you're saying, oh shit, why did I have a break even? But how many times does it retrace? And if you don't have a break even, then it comes after your stop loss. And then you lose 100 or 200 pips. And now you lost that money in your account. Now the mindset changes. The mindset is much different from taking a break-even hit. I can take break-evens all day and I can bounce back in 2 seconds and look for another trade and not get frustrated, not get mad at anything because I know I haven't lost any money. But if I take a trade and it hits a stop loss where I should have had a break-even, now think about it. Now I know how you're going to trade after that. You're going to trade frustrated. You're going to trade. You're not going to be thinking correctly because the last thing you're thinking about is now patience. The last thing you're thinking about is discipline. You know that you were in the money, 100, 200 pips. You're not at a break even, and now you're lost 100, 200 pips. Now you're going to possibly take a revenge trade right after that. It's just human nature. You're probably going to trade right after that to make up your loss. And what happens if the market is going against you now and you take a further loss? Now look at what could happen. You might now get yourself into a trading slump that will take you multiple days, weeks to get out of, or you could now blow up an account, or if you're working on a phase 2 of an account or whatever, and lose it. And then you got to start from the beginning. So a break even goes a long way in trading. Believe me, not for the money, not for that, for the mindset. For the mindset, it just keeps your mind clear, and you can think properly. You understand what, and then you can go back and learn what happened without being upset. Okay. No, Shohab, now I'm speaking to you, okay? So you just wrote, I'll not message you again if you troll your fans. Okay, number one, I don't troll fans. I troll idiots that don't know how to speak. You told me, like, you're telling me to what to do. I'm not telling you anything what to do. I just said use manners. You can say, hey, can you please do this? No problem. But I'm not your servant here, okay? I just want to make that clear to everybody here, okay? Just because I'm on YouTube doesn't mean like I got to take your orders here. I do this on my free time. I enjoy this, but I'm not here to get stressed out on a Friday. So whether you want to stay on the channel, whether you still want to be a fan, you're more than welcome. I apologize, but you got to understand too. Your comment was out of line. Stupid. Now let's get over it, okay? I'm over it. If you want to still dwell on it, dwell on it. I'm over it. I want to watch these bodies of these candles over here. Whether you want to stay or go, I don't care. Guys, what about World Cup? Let's talk some football right now. What games do we got going on today? We're going in the knockout stages very, very soon. This weekend, Canada plays South Africa Sunday at 3 p.m. Eastern. Today, we've got some big games. Wow. Norway versus France. That's a big game. Senegal versus Iraq. Uruguay and Spain. Cape Verde and Saudi Arabia. New Zealand and Belgium. Egypt and Iran today. Some big games. Yeah, Norway and France. That's a good one. That's in 2 more hours. Don't forget, guys, 1:30 Trump is speaking. That could move the markets, right? Anybody watching SpaceX? Remember, guys, like you don't have to buy the highs, right? Let's look at SpaceX when it IPO'd. Remember, we were watching it live on the 1 minutes. Okay, look at it. So if anyone, right, when it opened, it was supposed to open up at 135, right? That was the IPO price. It was supposed to be 135 right there. It gapped up to, look, 150 and then took off all the way. Look at where it went up to. And I know I was speaking to someone and they said, Ron, I got stuck buying SpaceX at 220 a share. And they're holding in drawdown. Okay, maybe will it ever come back up there? Potentially, but look at, if you just waited, you didn't need to buy at the all-time high. Okay, remember what I told you? When IPOs happen, they use retail traders as exit liquidity, right? And you're wondering, whoever bought like up there, 215, 220, 225, you were their exit liquidity. These guys made millions and millions and millions of dollars. Okay, and they need to find a buyer when they're selling, right? That's how an auction works. And you bid hook, line, and sinker, okay? And look at what happened. This is why I hate FOMO trading. I hate it. I absolutely hate FOMO trading because I'm not missing out on anything, okay? Because look at what happens. You get caught and then look at how it comes down. And look at where it's right back down to. $150. It's like when it first opened, it was the excitement, the FOMO. And then when reality sets in, it's right back down to where it originally started, right back to $150. But you had to wait. Look how long you had to wait. Count these with me. 1, 2, 3, 4, 5, 6, 7 to 10 days. That's 2 weeks of waiting. How many of you guys can wait 2 weeks? Right? We can't even wait for gold for 5 minutes, and I'm gonna tell you guys to wait for 2 weeks, right? We can't even literally wait for 5-minute candles, and I'm gonna ask you guys to wait for 2 weeks. That's what I mean, guys. Trading involves patience. Whether you're a scalper, whether you're a swing trader, whether you're a day trader, whether you are an investor, whatever you are requires patience and discipline, okay? And always know in the back of your mind, markets will retrace wherever there's pending orders, okay? You can't control it and I can't control it. The market will always come wherever there's a block in the market. Why? Because that's how auctions work. It will come where the money is, okay? But you have to wait for it to come there. We can't control when it will get there, but what we can control is how we trade or how we wait for it. Shepo, you guys are playing, yep, Canada, South Africa. It's going to be a good game. South Africa is playing unbelievable. They're doing really good. Okay, guys, so while we're here, let's just look at next week's forecast. Just to what we got. So Monday, guys, if you're trading, Italian banks are closed. Not much going on. So Monday morning, we'll get started early. We'll get started at 6:30 a.m. We'll go to 10 a.m. So be ready Monday morning with us. We'll go over the weekend's news. We'll do a top-down analysis. We'll get ready for Monday's trading, but no big news Monday. Tuesday, again, very busy in Europe, but no high impact. We've got the JOLTS job openings coming out. Okay, 10 a.m. When I see JOLTS job openings, that's the job openings labor turnover, I know something is coming up regarding NFP when I see that, okay? And then we come into July 1st, Wednesday. Now we come into a new month, okay? Canadian banks will be closed for Canada Day. And we have a lot of news. Wow, look at Wednesday, 9 a.m. Fed Chairman Kevin Warsh speaks at 9 a.m. right before Wall Street. We've got our ISM manufacturing high impact news on Wednesday. We've got our so it starts to get busy on Wednesday, and then Thursday, here it is. Thursday, you know how I say the first Friday of every month is non-farm payroll? They're moving, it's a Thursday. Why? Because Friday is a bank holiday in the US. So Thursday of next week, guys, mark this on your calendar, is NFP. There's our average hourly earnings, our non-farm employment change. Look at what they're looking. It was a big surprise. Remember last NFP was green, bullish. It was really good for the US dollar, and that's when gold sank and the markets moved. Look at that, was 172,000 jobs they created at that time. There were a lot of it was retail jobs. And now look at their forecast. Look how low it is. 114,000 from last month's 172,000. Okay. So we'll see what the actual number is. If this is below 114, this will come in red, and that would be terrible for the US dollar. Then we could see gold pump. Okay. If this is above let's say it exceeds 172. Let's say this number comes out 200,000. That would be really good for the US dollar. And then we could see gold dump after that. Okay. So, and then our unemployment rate, they're holding it steady at 4.3. We will see the unemployment. Okay. And they also have Thursday, our official unemployment claims that come out week over week every Thursday morning. And so mark that, guys, on your calendar. Thursday is NFP and Friday is probably another boring day like today, and US banks will be closed. So there will be no Wall Street, there will be nothing. SST may take a day off on this day or will come in and educate, okay? Because we know what it's like trading on bank holidays. Spreads are shitty, choppy trading, range trading. It's just not a great environment. It's a good day to take a day off and enjoy a long weekend. But Thursday of next week is the big day. That's NFP. Mark that on your calendar. Moske, can you kindly explain head and shoulder setups, and do they usually form on gold? Yes, absolutely. And I like the way how you said how you asked politely. So I'm going to answer your question. Head and shoulder patterns. Okay, so let me just show you real quick what a head and shoulder pattern is. Okay, so there's two, bullish and bearish. Let's talk with the one first. Okay, so it comes up, right, and then it moves down. And then maybe we'll find some support here halfway of this retracement and then break out, right? And then come back down and then retest this and then go down, okay? So that's a head and shoulder pattern. This is a shoulder. This is your head right over here, okay? Just think of a person. Think of me. This is my big head over here. This is my shoulder and my other shoulder. Okay, so when the market comes up here, it might come up to, let's do this as a red zone. Let's show you this exact setup. Okay, so it's coming up. Let's say it's coming up bullish, strong blue candle, comes up to the resistance, the red block, and then there's some sellers, and they offer and they push it down. However, it comes into 50% of this bullish move, right? Follow me, okay, and then it comes in here. And then you see 50% comes down, retraces, but it doesn't break down, okay? It holds a higher low. And now it comes back up, hits those pending orders, gets more buyers, and then it comes through and it can officially have enough volume to break that previous high, which is a shoulder, and then it creates this. Then we have the spike, the big impulse breakout, but when it gets up there, then there's bigger sellers up here, and they reject the move, and it comes all the way down. But when we look for a retest right there, normally we look for it to retest this and go back up. But you can see in this particular situation that the sellers are in full control of the rejection, and they bring it back down, and they close it back below this red zone right over here. Okay, and then when it comes back up with those dip buyers, now it's right here, the previous resistance. There's the head, which is, in other words, like a liquidity grab, where it comes up and fakes out the market and comes back down. And then when it's coming back up, it's retesting the opposite shoulder, and that's where those offers come down, and that's where it's got the bigger driver of more sellers with the liquidity grab, and then they move the market down. So that's a traditional head and shoulder pattern as to what happens with liquidity, okay? And then if you're doing opposite direction, if it's a bearish to bullish reversal, let's use this green zone as an example. So the market is coming down bearish with black candles, and then comes into the green. We get a little bounce. It comes back up. And then let's say the white line is the resistance, right? And then the sellers are there right around halfway of this distance. And then they push it back down. But when it comes down here, we're looking for a double bottom, correct? We're looking for the double bottom. But when we're talking about head and shoulder, then the sellers with that continue to push down and push it. Let's say it comes down to the daily point of interest, and then it wicks off of there and comes all the way back up and closes. Now I'm illustrating the liquidity grab, how they broke it. They grabbed the liquidity, but then it came back up. There's your inverted head, and then it comes back in here. Then when it comes to retest the shoulder, this shoulder and this, then it's retesting the green demand zone, and then we got enough volume to continue to move up. So this is your head and your shoulders upside down, right? That's kind of the most basic way how I can explain what a head and shoulder pattern is. But when you look more into it, it's the liquidity grab, okay? So it's this here. Let's say we have a resistance, right? We're coming up, we get rejected, we come back down. We make a higher low, we break above it. It's nice. It's a big bullish move coming through here. And then the big seller is there, and then they reject it back down. But when we're looking to retest the white line to continue to go up with a higher low, there is no higher low. The sellers have full control and they close it back below. Then the buyers try one more attempt to bring it back up, but the sellers have already positioned themselves. Let me show you. The sellers have positioned themselves right there, right? Bigger sellers. And then as it's coming down, right? This block is now coming down here, okay? Do you guys see that? Look, okay, as it's coming up here, it comes into there. Then the first rejection happens, okay? Then we extend this into the future, and then you see when it comes up, the buyers are in control, break through there. But then when it comes up, maybe there's a higher time frame. Maybe there's a bigger block, a bigger seller up there. Then they reject it back down, and as it's coming down, new offers are populating this right here. So when it comes back up, it comes in here and gets rejected, and then there's the move down. Let's do Donald Trump, okay? I'm going to show you Donald Trump head and shoulder. Here's Donald Trump, okay? And here's Donald Trump's shoulder, okay? So this is a Donald Trump head and shoulder pattern, okay? So when the market's coming up here, watch, follow me guys, and comes back down, and then right here, the market is here, Donald Trump says something. He says something. He's speaking at what time? He's speaking today at 1:30. Donald Trump is going to say, the Strait of Hormuz is open. Okay? So Donald Trump says that, and then the markets will react. And when they come back down, Donald Trump and all of his circle have already the orders placed to sell the market down, right? So you need a clown like this, and this is the head and shoulder pattern, okay? And then sometimes it can be upside down, right? Donald Trump can be upside down. Sometimes it can come down like this, go down, there's his head, come back up, and then back in his shoulders, okay? So does that analogy help you guys? Of a head and shoulder, okay? That does look like Trump, actually. Okay, but you'll spot those patterns now more often, but you know now the head is grabbing liquidity. Okay, let's see if we can find one. I know when we're trying to look for one, we can't find one, but when you see them happening, we can't find one on this. And we're still, guys, after all of this, we're still inside doing nothing in here, okay? This could be one of the biggest head and shoulders developing on gold. On the hourly, like here, it bounced off. This whole thing could be the inverted head coming up. But what we need to do is get gold bullish to close above. Look, that daily and flip, right? Come up there, maybe to the 200, flip that, and then we come back down here. This is now a green zone on the daily, and it flips. Here's how a bigger head and shoulder can play out, right there. See how it came down there, originally bounced, came back up, lower high. Now all of this coming down picked up all of that liquidity for multiple days, but we're having a difficult time breaking this red block. If it does, it comes up, and then we'll come back and retest the shoulder, and then that will take off, right? There's an example of a multiple candle head and shoulder pattern. And look at where it's developing. This red zone is from that daily candle, what I told you guys earlier. Do you guys remember? If we look where we're trading right now, these 5 minutes, where did Ron get that red block from above us? Go to the daily. And I told you guys, remember at the start of the call? It's this candle, Wednesday, the opening that took us all the way down, and we're coming all the way back into it today. And what I said was, these sellers from the open down to there, to today's high, are potentially protecting their position. That's why I said, make it a red zone, stretch it into the future. So if we flip, look at the daily, there's a nice daily head and shoulder pattern that could be developing, right? Look at it. We're forming the head right now, okay? You see, it came down right there, came back up. There's the inverted head developing, but we need to complete it. It needs to break out of this, flip that bearish candle, engulf it, in other words, engulf it, close above, come back down and retest the shoulder. That would be green. And then we could take off and maybe test the all-time high trend line. Okay, this could happen next week with NFP. Remember, what would cause gold to break through here next week with NFP? What job results would we need? Okay, let's put the pieces of the puzzle together right now so we can think over the weekend. For gold to break through bullish next week on NFP, our numbers are 220,000. Where are we at? Sorry, 114,000. Okay, for gold, now let's be on the same page. For gold to break out and invert and turn bullish, what would we need for this number to be? Lower than 114,000 to limit. Easy, yes. We need it to be lower than this. Very, very shitty job numbers. That's not good for the US dollar. So if the US dollar is selling, then think about it. If institutions are selling the US dollar due to poor job numbers, then it could move into a precious metal or a gold safe haven asset and go into there. And then now you can see how an inverted head and shoulder is building on the daily, anticipating this news next week. Okay. And it could be invalidated, right? If these numbers are amazing, then it could be a fake out and go back down. And then we got to test the bottom to see for a double bottom. But that's basically how you can combine news with charting and trading, okay? But guys, that's it for me. It's 1 p.m. I got some things to do this Friday afternoon. I know it was a slice. We had a good time together. We're just stuck in this range, unfortunately. It's not moving anywhere. If you're going to continue to trade this afternoon, Donald Trump is going to speak in about 30 minutes. Could be volatile, could be a dud. I don't know. If you're going to continue to trade on a Friday, just prepare for the market power hour and a close. Consider if you're going to hold any positions over the weekend. Anything can happen in the Strait of Hormuz. It can open today, be closed tomorrow. There could be a war today and peace tomorrow. I have no idea what's going to happen. So, but all I know is if I'm going to have open positions over the weekend, how much risk am I going to take on? If I'm going to close all positions, I'm going to enjoy my weekend and then I'll do some analysis. Okay. So we will see you guys Monday morning, 6:30 a.m. Eastern. Join us. And don't forget, Thursday morning is NFP next week. So, and then it goes into a month close and a new month open. So lots of volatility next week, okay? I'm not taking an entry. I'm taking myself to go buy some lunch right now. That's where I'm going to go. I'm going to go enter myself in Dave's Hot Chicken with my son, and we're going to go eat some chicken. That's where I'm going to do right now. But Shepo, I'm going to enjoy the 3% you made out this week. Unbelievable. Okay. So when I say, Shepo, around 0.5 to 1% for a week, you're right in there. There's your 2.2% to 5% target. You hit 3%. Unbelievable. So, Shepo, for a word to you, just go over all of your trades this week, learn from them. What you probably made maybe a mistake in there that you can learn from, but a lot of it is positive trades. Learn from those positive trades, and let's carry that 3% momentum and compound it into next week. But we have to be careful because we know that NFP is Thursday. So we don't want to just go take that 3% and go gamble next week. We want to take it slow and steady. You know, we got to weather the storm, and maybe we can take that 3% next week and make it to 5%. And then in a couple weeks, it can go to 10% and continue scaling. That's the way how you grow accounts, is slow and steady. We don't want to make 3% this week and then lose 10% next week. That's gambling. So you guys got to understand this, okay? Slow and steady. You're going to be a trader, Shepo, for the next 5, 10, 15, 20, 30 years, okay? So 3% today, this week, another couple percent next week, another couple percent. Yes, when we give back, we're compounding an account, we give back a little bit and we make more. And then you'll watch, not only will your account grow, Shepo, but your confidence is going to grow, your experience is going to grow, and you're going to be like you're going to control the markets. The market, you will be the market maker. You will control your own trading. You'll control your own account side. You'll do everything. And then you're going to tell me, Ron, this is unbelievable. Trading has literally changed my life, and it will, guys. So, and guys, also don't forget the giveaway today. We're going to announce the giveaway on the Telegram. Make sure everyone, if you want the giveaway, that's up to you. If you want to join, there's got to be some rules for it. You got to be enrolled in the AI Trade Ideas Telegram. We have the link there, and also enrolled in our free Telegram. If you come right over here, there's the giveaway alert. You got to be enrolled in those, and Dave and I are going to have a lucky winner, and we'll announce it, and you get a premium plan with us at SST, and also a free month of the AI Trade Ideas, where you can plug in those charts and it will spit out something, a trade idea, in 10 seconds. And if you saw the one we had on the NASDAQ, it dropped 500 pips from when we placed it on there yesterday, when we showed you as an example. Okay, so guys, I want to wish everyone a great weekend. Enjoy the World Cup soccer. Enjoy the family time. Enjoy the time off of the charts as well. You need time to relax, rewind, and come back energized for next week, Monday morning. And please, guys, if you can, leave us a like and a subscribe. And let's try and get this up to 103,000 for the weekend. Another 60 subs, maybe 50 more, and 40 more subs, 33 more subs, 30 more subs. Can we get it? Can we do it? That would be amazing. And we get up to 103,000 and 25 more. We're right at that psychological point. This is like an auction. Okay, we're at 975. It's probably going to dip down to 950. No, we're building some support at 950, at 975, but we just died off. The volume died off right now. Okay, so you see we're in a range now, stuck at 977. Where can you watch Trump's speech? On YouTube, there should be links. Just put in Trump's speech. You can write in where or right here. Come to Forex Factory. I'm sure there's a link. Let's go. Where are we at? Let's see. Here, full details, related stories. Is there a link here? Right here, upcoming. Here could be the link right here. I'm sure you can find a link, or YouTube it. There should be in there. Okay, guys. Gold is just stuck in a range. So just be careful trading this afternoon. Okay. Shepo, you're now funded with a 200,000 and it all happened within a month, all because of SST. No, it's not because of SST. It's because of you, Shepo. You did all the hard work. We're just here alongside with you, but you put in all the work. So it's everybody at SST, including everybody in the Discord, helping each other out. So it's amazing. That's what we're here for, Shepo. I love to see success stories. We hear a lot of just blowing up accounts, blowing up accounts. Blowing up accounts is the theme of trading. So it's nice to hear someone doing really well in trading. It's a nice story. I love hearing stories like this because a lot of times all I hear is, I've lost $10,000. Ron, help me. Ron, I've lost my life savings. Help me. Ron, I've blown up an account. Can you please help me? A lot of it is those type of stories, which I'm here for that. I know how it is. And but it's nice to hear stories like this, Shepo. Same with the story we heard from Vinay with the blog that we did back here, where Vinay, his breakthrough story. So Shepo, this is, you're another breakthrough story over here. So congratulations, brother. It's just the start, just stay focused, stay disciplined, and let's continue this momentum. Okay. Thanks, guys. Have a good weekend. God bless everyone. We'll see you guys Monday morning, 6:30 a.m. Eastern. Leave us a like, subscribe to the channel, and enjoy your weekend. Have a good weekend, everyone. Yeah, we'll do live NFP if we get 20 subscribers. We'll do live NFP with you guys. Okay. So have a good weekend, everyone. And we'll see you guys. Thanks, everyone.